Meanwhile, the market for initial public offerings is on fire here in the U.S. There were more deals in the first half of this year than there's been since 2014. If the pace continues, 2018 could be one of the most robust years in over a decade for initial public offerings. Joining us right now, an expert in the field, Renaissance Capital Principal and IPO's ETFs manager, Kathleen Smith. Kathy, it's good to see you this morning.
Thank you.
Thank you so much for joining us. So the IPO market basically was left for dead a couple of years ago, just 2 years ago, and now it's come roaring back. What's behind it?
Well, returns are the fuel that drives the IPO issuance engine, and the returns for IPO investors have been very good. They've far exceeded the benchmark indices over the last couple of years, and that's coming off of some very weak returns that the market had in the end of 15, early 16. So there's a recovery and an interest among investors in growth. Growth is the common denominator for many IPOs. Technology and healthcare biotech are big constituents in the IPO market. So that is really what is behind it. The market's a little different now than it was in 99, 2000, the internet bubble. For example, the average IPO this year has been priced at the midpoint of the range, and the first day pop has been 15%. Back in the 99, 2000 days, the first day pop was between 50 and 70%. That's a little bit unsustainable. We have a smarter player in the IPO market now. Individual investors and their advisors are preoccupied with indexing. They're not stock selectors anymore. Back in 99, 2000, we had a lot more of that kind of money in the market. So we have a slightly more discerning investor that's kind of helping keep the market a bit under control.
What are the big ones that are coming up for the second half of the year that you're keeping an eye on?
Well, the unicorns are starting to come out. Even though the Ubers and Airbnbs probably will wait till 19, we are seeing some important tech companies. Some examples are the wireless speaker company, Sonos. We're expecting to see SurveyMonkey. Other enterprise software companies, a big list. The tech sector of the IPO market was up on average through the first half over 50%. It was the best performing sector. So that will unlock the interest of companies coming out. And we are seeing the attempt to get some good price discovery from the valuations that have been pretty high in the private market to have it evolve into, what a liquid public stock valuation ought to look like.
You still really need to do your homework on these issues, and the difference between the dot-com bubble in 2000, 99, 2000, and now is when you have these healthcare and biotech companies, if you're talking about cancer drugs, just as one slice of that industry, there are very few people on the planet who can really analyze clinical data and analyze the potential of maybe a blockbuster drug, maybe even smells bad, a drug that really has no efficacy whatsoever.
And they burn so much cash.
Right.
The burn rate for these companies is huge.
The biotech area is a pretty tough area to do real work, as you mentioned. And many of those IPOs are being done with the help of the existing investors. So there's a little bit of a boost that the biotech IPOs are getting from their existing owners. But basically, it's telling you that the biotechs and even the Dell deal, the Spotify deal, that being public makes a lot of sense for companies. And so however they do it, they respect the fact that having a publicly traded stock has advantages to their operations in the long term.
Well, you also have a rollback in regulations, which is important to note, right? Because initially you had a tight market where the regulatory environment was different than it is today.
There has been a rollback, but I'm not so sure about whether we're big fans of that, because I think actually when you're trying to do your work, it does help to have a little bit of time. The process is pretty rushed right now, and it's helpful to have more information rather than less. However, we're a fan of reducing the cost of going public. I think certainly you want to kind of lower that barrier if you can.
And real quick, I got to ask you about China deals, because with all of this fighting and battling back and forth with the Chinese, China IPOs have been one of the big fuels for the major exchanges, haven't they?
They have been, and
have they slowed up, or are we still seeing the same pace out of China?
That's a very good point, and you would think they would have slowed up. The second largest or third largest deal in the IPO market so far this year was the Netflix of China, iQIYI. And these stocks, even though they've pulled back a little bit with the worries about our China dialogue that's happening, there is still a strong interest. And to answer the question about some important deals coming up, it looks like Tencent Music will tap the U.S. IPO market with $1 billion IPO. That will be significant. And a very interesting company called Walnut Street, but in China it's called Pinduoduo. This is a company that is the third largest e-commerce company in China, and it's about social team e-commerce.
I heard about that company. Yeah,
so
that's going to be a big deal.
A big deal, $1 billion deal, something to watch out for.
We often, in the last cycle, we saw IPOs heating up at the end of the cycle. The fact that the market's so hot right now, is there any warning signal in that maybe the market's getting a little stretched out?
I certainly think that IPOs are, of all equities, the riskiest area of the equity market. So it does tell you that investors are comfortable with risk. And yes, we should be concerned when IPOs are starting to go crazy. And it's not a good sign, but I will say that the overall stock market has climbed this wall of worry for so long. So it's not disconnected with the overall stock market. If we get a stock market correction, there will be a correction in IPOs.
Sure. Companies go public when they feel like the environment is going to be good to them, obviously. Kathy, great to see you. Come back soon. We want to track this story for sure. Kathleen Smith from Renaissance Capital there.